So I'm making this video from my garden today, so I do apologise if the volume isn't as good as normal, but I wanted to make a video on a strategy that I would use. Again, it's another scalping strategy. I made one last week on break of the 15-minute candle, any 15-minute candle, but today I'm going to go into kind of lower time frames, and I use this on the 3-minute time frame, and believe it or not, I also use it on the 15-second time frame. Now, the whole purpose of this strategy is to pass a prop challenge relatively quickly, because you don't get paid for challenges, and the last thing you want is to be in them for weeks or even months. I have a swing trading strategy that I use. It's mean reversion, and I've got a strategy of Sergey Malaga. I've made several videos on Sergey. He's the World Cup Forex champion and futures champion, and you just always see his name in the top 5. But that's a swing trading strategy, and to pass a prop firm with that, it's very difficult. It would take time. Then I've got an intraday strategy where sometimes I get a win, sometimes I get a loss, and some days I don't get a trade. So again, very difficult and disheartening when you're looking to pass these challenges. So that's where the scalping strategies come in, and these are the ones that I use. The one I'm going to show you today is the most successful one to pass. And just before we get started, it's worth understanding these prop firms and how they work and how you should manage them. So let's say, for example, someone approached you and said they would guarantee for, let's say, $50 you would pass your challenge in 3 months. Or someone else approached you and says, guarantee you will pass this in 2 weeks, but it's going to cost you $200. What one would you choose? Would you pay $200 for 2 weeks or $50 for 3 months? Of course, you're going to pick the $200, pass your challenge in 2 weeks, then get onto live trading. So that's something to consider if it takes you 2 or 3 times. I know a lot of people these days are doing the top step combines, which is $50 a month. Now, if you need to reset that 2 or 3 times before you pass, then so be it. You do not want to be sitting in a combine for months waiting to pass it, because time is money. Right, with that said and done, let's get into this strategy. The indicator that you see here is the volume weighted average price, the vWap. This purple line in the middle represents the average price from the beginning of the session. Okay, now you can set this for a week, month, you can do anchored vWaps and all this fancy stuff, but we're just sticking with the session vWap because the session starts at midnight, and we're going to start trading this at the New York session, which is UK time 2:30 in the afternoon, New York East Coast time 9:30 in the morning. That's the session that we're going to trade with this strategy. Now, you can use any other session if you're in Asia watching this video or wherever else. I've just selected New York because it's the afternoon, it's the best time for me to trade it, but it does work on any session or in between sessions. Okay, so vWap is this purple line. So what are the blue lines? These are standard deviation 1. So this is -1 standard deviation, this is +1 standard deviation. The orange line is a positive deviation of 2. The orange line here is a negative deviation of 2. And then the outer line is a positive deviation of 3, +3 and -3. Now, this is saying that this area underneath the purple band is a discounted area, and this is the only area where you want to be buying. Okay, you do not want to be selling in a discounted area. So anywhere here, okay, this is where you want to be buying. Okay, you do not want to be short in the market underneath this purple line. And on the flip side, you do not want to be buying up here. You want to be only looking for sells, because this is classed as a premium area. So this is premium and this is discounted. This is where you want to only look for buys, and this is where you only look for sells. Now we're going to drill down further. We'll just get rid of this and rid of this. Now, the theory goes that when you are at a standard deviation of 1, which is this blue line, okay, as you're coming back into that, okay, we are hedging that it's going to reach the actual volume weighted average price, the equilibrium, okay, the price is going to balance. That is what we are saying. And on the flip side, if we are at a negative standard deviation of 1, then as we come back in through the band, we are saying that we're going to reach the vWap. So let's look at just this session here, okay? So where we would have entered, right here, this is where we would have entered, and this would have been a good trade. If we just change the colour of this here to green. Why? Where would I have entered? I would have entered right here as it comes back in. Take profit would have been at the vWap, and stop loss would have been below the previous wick. You can see here it's a 2-to-1 trade. We do not take the trade if it's offering anything under a 1-to-1. I would even take the trade personally because I know it's got a super high win rate. So I would take the trade personally, and I have done, on a 1-to-1 basis. But if you want to be a little bit more conservative, don't take the trade unless it's showing you a 1.5 or a 2-to-1 or whatever you're comfortable with. But there you go. I'm not going to put any more of these boxes here because it's going to make a mess of the screen. We will just use these arrows. So you can see here we come back through the blue minus deviation 1 and we hit vWap. Okay. Here we had another trade. You can see it come outside the standard deviation positive 1, and as it came back through we enter, and as you can see it hit vWap. Here's another one here. We come outside standard deviation positive 1. As the red candle breaks back through, what do? Straight back to vWap. So that's 3 trades in a row. Here is our first losing trade. We come back through standard deviation. Remember, our stop loss would have been just above this wick, and we would have got stopped out here. So this would have been a losing trade. And our next trade presents itself here. We're way outside standard deviation 1, and as we come back in, we enter, and on the next candle, straight down. And I would have potentially have took a long position here as well, because another strategy that you can use is actually bouncing off the vWap. You can see it happens here, and depending on where your stop loss is, it happens here. But big wick, yeah, big wick is something I have traded and I always pay attention to, no matter what time frame I'm on. It speaks 1,000 words and tells me that that area is being rejected and we're going to go up. But back to the strategy, there we go. We came in through the band down to vWap. So just in this New York session alone, we had 5 trades, 4 of them were wins and 1 of them was a loser. So if we come, we'll just come to another day. Here we come outside here, we would have entered as we come back in through the standard deviation, and we hit vWap, and look how it actually wicks it, to perfection. It wicks it. So we'll come on to the next day here. So here we have a losing trade. We come in through the negative deviation, and this actually looked good because it came way down here and then we come back in, but it fails. Actually, this isn't even the New York session, this is Asia session. So this just shows you that it works in Asia session as well, because you can see here we come back in through the negative deviation of 1 and we come to vWap. So let's come to the New York session. So this is the last New York, no, this is the New York session, yep. So you can see here that the New York session, when it started here at 1451, made a big drop off, and then we come back in here on this green candle expecting to go to vWap, and the trade fails, okay, but we catch it our next time. This is a signal as well. You can see here it's actually respected the standard deviation 2, okay, So this lets me enter this with confidence. I would maybe even scale up my position here because it's creating a wick, rejecting this minus deviation 2, and I would have entered here as we go through, and we hit vWap on the actual first candle, one candle, 3 minutes. So this is a really good one to talk about here, because when you see stuff like this wick here appearing on the minus deviation 2, when you see this, you can do one of two things, or you can do two things. You can scale up your position, right? But what you can also do is you can hold your position, because this tells me, because it's a big massive strong move, in one candle we get there. So I would have potentially have moved my stop loss up to the outer band here as well. And this is stuff that you recognise through experience. You know, if you notice this wick and you notice this candle had a lots of momentum coming through, you could have potentially have moved your take profit line up to here. And instead of, let's look and see what we would have gained here. So we would have entered here, stop loss on this wick. So instead of getting a 1-to-1, you would have got a 2.2-to-1. So it's just things through experience that you can see things like that wick. So anyway, here's our next trade. We come back through again, we wick it, standard deviation 2's wicked twice, back through with a big momentum candle, and we reach the vWap. Again, we see it here, so this is a typical setup. You see back to here what I mean. Look at this, 1, 2, 3, 4, 5 candles we took to reach vWap, whereas this looks as if it's getting there in one. So that tells you that you should probably push your take profit up a little bit. So here, again, we come outside it, enter here, straight back to vWap. Here's another positive trade here, and again, this is a short position. We've got absolutely no bias with this at all. We just follow the process. So you can see here we come back through the outer band, and in the very one candle we hit vWap. So that was a positive, good trade. And another one down here where we come back through the inner band. Again, you're going with momentum, you come back in through the inner band, and just think of this as a magnet. Yeah, when you come in through this blue line, it's pulled towards. You've got buyers here, because remember what we said at the beginning of the video, this area is a discounted area. This is where you've got buyers, at least people that know what they're doing with trading, are not going to be shorting underneath the vWap. They're going to be taking long positions only. So you've got momentum here, you enter, and straight to vWap. So let's look at this day. This day we had 1, 2, 3, 6 trades, 5 wins and 1 loss. So that's a strategy that's very easy, very simple to follow along to. Again, I use it, and this video has been done on the 3-minute time frame, but this also, it pretty much works on any time frame, lower time frames. I use the 15 seconds and I use the 3-minute. Thank you for watching. Until the next time, stay safe.